That's all I'm looking for. 10 points. Around 10 points. So let's see if we can get a little bit of an active 20 SMA play here. Again, this 200 period moving average has been a pain in the ass all day. It's been a pain in the ass all day. It was a pain in the ass earlier, right? When we kind of broke it, we tried to confirm it, and then it kind of fell through. But again, I believe on the hourly time frame, we were kind of running into that 20, or yeah, on the hourly time frame, the 20 SMA. So that was a little bit of a problem there last time. And we're back down to the original breakout spot. So, you know, the way I'm kind of looking at the markets right now as a whole is, you know, what's the original breakout spot? Well, the original breakout spot was kind of getting over that pre-market swing high, right? So those opening 20 SMA plays, right? The first one was a 44-point range, would have paid a 1-to-1. The next one was a 29-point range. It did pay at a 1-to-1. Those breakout spots through that previous pre-market swing high, we've come back down into this range. So previous resistance, once broken through, is now being back tested as new support. Now, if we start to break down through this floor that we're building, okay? If we break down through that floor, I'm not going to get too excited to try to take that early short because I have support at 18,821 and I've got support also at 18,809. I felt like I talked about 18,809 yesterday, right? Did I not talk about that yesterday? I think 809, 800, or was it 900? Maybe it was 900. I'm not sure. I think it was 900, but something with the 09 sounded very, very familiar. So anytime you get into those whole numbers, right? The hundreds, 800, 900, 700, you know, you're expecting a little bit of a fight. You're expecting a little bit of a battleground there. And when you get that battleground is generally when things tend to get choppy. Now, if we do break down below 809, I might be interested in a short position, okay? I'm not interested in a short position above 809. You know, not to say that you can't play rejections, right? You can't play these reversals. They're just too dangerous for me right now, okay? And the only reason I say that is because I don't even know what the hell this balance is. What is this balance on this stupid PA, or on this funded account? So the balance on this funded account for today is $327.92. So that's why on this last trade that I just took, that bounce, when I got on here with you guys, off the floor, like I said, 2 contracts, I'm looking for around 10 points. That's it. That's it. If I can manage to find another trade or another 2 trades like that, great, right? Great. But I also know that I'm not going to get killed if I'm wrong, okay? So if I'm wrong, and let's say what could potentially be like a worst case scenario if I'm wrong? 50-point candle that goes against me in the opposite direction, right? That'd be pretty drastic, but let's just say worst case scenario. Well, trading 2 micro contracts, 50 points is only going to be $200, right? So that would still leave me with the net positive P&L on the day. So essentially right now, what I'm trying to do and how I'm trying to manage this account is I'm trying to stay rent-free, okay? I'm trying to live rent-free. Meaning that whatever I do today, I don't want to give it even the smidge of opportunity to destroy what I've already done, okay? Now, as you're managing evaluation accounts, as you're managing funded accounts, that's the way you need to start looking at it. I'm a big advocate of always kind of getting green, getting to a level, a number that feels comfortable to you, and then stopping out completely. But we're human, right? We want to trade. We want to see if there's another opportunity for us to make money. And in that particular situation, what I don't want to have happen is I don't want to continue to trade and give everything back and go red, right? So the size will come off the table. I opened up the day trading 1 mini contract, and I was in on this run here on those opening 20 SMA plays. Um, and that's essentially it, right? I didn't take the first one because I did really want to wait, but the second one, once we started to break through, is when I took it. And again, I tried to mention this morning that I really wanted to stay out of the market for the first 30 minutes, but the momentum on this candle was so huge coming into this previous swing high from pre-market. I mean, it was flying, right? I mean, it was flying. Any of you guys who were a part of that move know that it was flying. So again, that's just the human nature behind it. I wanted to wait the 30 minutes. The momentum was there. It was my active setup. What the hell, right? Let's play the game. That's what we're here to do. We're here to play the game. So let's play the game. But once you do that, now it starts, getting into management, right? We have to start managing after that. I know a lot of you guys took this play here, this break through this 200 SMA that ended up getting stopped out. Okay. It's a legitimate setup, right? We got the break through the 200 SMA, we got the confirmation, and then it just kind of fizzled out. That's a legitimate setup. The only thing that we can change in those type of situations is, depending on where you're at in the day, if you took part in the run up and you made money, the position size, I'll tell you, for one thing, needs to be cut in half. Now, if we didn't make any money on the run up and we're trying to catch this move up here, you have to think about this, right? You have to think about this. If you did not, participate in any of this move off the open, and you're looking to, because momentum is strong, you're looking to get that first position here over the 200 as your starter position. That's your first position of the day. That's your first trade of the day. You're jumping off the 10th story. Okay. Now, that's not to say that we did not have room to push up towards 900, because we absolutely did. It's a legitimate play. But we need to, whatever position size we would normally feel comfortable playing on that particular trade, we need to cut that in half, right? So if one is trading, let's say 4 micros or 5 micros, we've got to trade 2, right? If one trades 3 micros, we've got to trade 1. If one trades 1 mini contract, we've got to go to 5 micros, right? So that sizing has to be cut in half. And the reason why it has to be cut in half is because we're not getting in on the original move. The original move has been in play since the opening bell. And now we're trying to come into this play almost an hour after the opening bell on an existing move. Okay. So that's the only thing that we can kind of change in that particular situation, to avoid, getting stopped out. The only other thing that you can do also, which I don't know if anyone did, but if the move is strong and we're starting to pull back, well, this is not an end all be all. This doesn't mean that, hey, we got rejected at the 200, let's just go short. Now, again, different strokes for different folks. Could one have got in on a rejection of the 200 for, 1 or 2 mini contracts and taken a couple points and had a great scalp? Sure. But is there also that trader that took 2 to 5 micros that was looking for an extended move back down to the opening, like kind of range, or back down to the lows, that ended up getting chopped up, frustrated, and just manually stopped themselves out for a loss? Yes. Right. So when you start to look at this day start to populate, right? When the day starts to populate and you get these multiple candlesticks, to be honest, I love taking trades in the first 30 minutes, not necessarily the first 5, but like within that first half hour. I love to take those trades because the range is big. And if you're right, you can essentially be done for the day. But I love finding setups a little bit later. Now, that doesn't mean finding setups the last hour of the day, but after the opening hour candle has been set and price kind of slows down. Right? When that volatility slows down, I love trading in that pocket, right? So for me, it's like, after the first 30 minutes or before the first 30 minutes, I like trading because of the big money and volatility, but I'm very, very comfortable after the first 30 minutes of the market into like lunch hour and right after lunch. And then after lunch, like, I'm in California, so by like 10:30, 11, I'm like done. Okay, because then for me it dries up too much. So I don't like the price action to be dried up too much, but sometimes I don't like trading it when it's too large, right? If that makes sense. So find that pocket that works for you. Maybe you do really well when the volatility is high and the ranges are big because of your sizing, and you can catch that one move and call it a day, right? There's a lot of people in our room that, you know, they make money in the first 20-30 minutes and they're done, right? And then, you know, there's some people who make a little bit of money and then they give it all back during this time, right? And if that's the case, then maybe for you this is not the best time to trade, because maybe you don't have the patience to sit through and wait for the bigger setups. You're almost needing to switch the way your brain is analyzing the candlesticks right now to not, you know, think, well, this is going to go down, so let me short. No, this is going to break and go to high of day, let me get long. No. Find a legitimate setup. So for example, on this long position that I took, I watched it come down to the 50 EMA once. It bounced, got rejected. It came back down a second time, bounced, got rejected. It came down a third time, three times. That's when I finally said, okay, if we take out this swing low, market's going low. That would be my analysis of what I'm looking at, because I've watched it for 5, 10, 15, 20, 25, 30, 35, 40 minutes. I watched this price action zigzag. I wasn't bouncing the first time, getting stopped out, going short, getting stopped out. I wasn't doing that. I needed to see multiple touch points. 2 minimum, 3 perfect for me. Once I seen that third test, right, we cracked through the EMA and we started to push up. Well, sure, as soon as this new candle opened, as long as we don't take out the prior 5-minute candle low, let's get long. And we're not looking for much. Again, I was only looking for 10 points. That's it, 10 points on 2 micros. Not a lot of money. We're talking 35 bucks after commissions. Not a lot, right? But that's fine. I'm okay with that. I'm not going to sit here and try to impress anyone or try to make $10,000 today in hopes of XYZ, right? So also, I will be very, very honest with a lot of you guys out there. Be careful with where you're getting your information from. Now, if you're getting your information from Twitter, you're getting your information from various YouTube channels who are promoting very, very high growth and high returns, be cautious, because that's a fantastic selling point. It's a fantastic marketing angle, right? Now, am I saying that these particular people are not doing those particular numbers? Of course not. They are, but situations are different. Your situation is very different than their situation. Your bankroll and account size could be much, much different than theirs. So in turn, their risk profile can be a lot different than your risk profile, right? Blowing up 1 account, 2 accounts, 3 accounts, losing a couple $1,000s to make a couple $1,000s is nothing to someone when losing $200, $300, $400, $500 and losing 1 account is everything to another person. Okay, so just be careful. Focus on what's right for you at the end of the day. Again, I'm a big advocate of making $25 to $50 a day and calling it a day and just letting the days compound. And the reason for that is because over time, and the reason I'm talking so much, because there's nothing going on right now. Okay, so there's no reason to try to guess here. You're in the middle of a range. So don't start thinking, well, if you bounced from down here, maybe I can bounce from here. I don't, like, again, the bounce came already. That was it. If you're thinking, well, I should short, well, your short came right here. It was 2 candles ago. Your short came here when we got rejected again at the 200, and you should have been selling into this demand. So again, right now, there's nothing going on. So train yourselves to be a little bit more patient. Even if you're scalping 1, 2, 3 points on heavy size and you're just trying to catch a quick move, just be careful. Because again, I'm not going to say that I don't do that. On evaluation accounts, I will 100% put on very, very large size, meaning a lot of contracts, and I will look for those 2 to 5 point kind of moves on very, very heavy size. Because I'm not going to sit here and waste 30 days, 60 days, 90 days trying to pass an evaluation. There's no money in that for me, right? There's no money in that for me. Just like there's no money in that for you. So if you do have a way and a system to trade, make sure as we get this breakdown, we have support sitting down here at around 820. So let's see what we do here at 820. We're coming right back down to this line in the sand. And we just started a new hour candle as of 10 minutes ago. So we still have support down to this 820, and below 820 we have next support at 810. Okay, so for me, this uptrend is not broken until we close below 810 and then start to confirm that. But even with that, I would have to scroll over to my hourly chart and see where we at in the pocket. And this is getting very, very close to taking out prior hours lows with potential down to 797. So yeah, there might be some potential to around 790s. There could be some potential to 790s. That was a big, big area where bulls kind of stepped in previously and bounced. It could be another big area where they step in again. This would create a higher low for a continuation for a move to the upside. Again, there's no real, this hot air balloon doesn't get popped until we get over 900, okay, to the upside. And this hot air balloon doesn't really get popped to the downside until we start losing 750, 760. Makes sense? Everything else in between is just pure scalps, finding that price target that's working for the average true range on the time frame that you're trading right now. So if we're talking about a 5-minute time frame, our average true range right now is around 18. Okay, so if you want to kind of boost up your win rate, and you're okay with with taking more risk than your return, again, because that's such a big topic with a lot of educators and mentors and people who are teaching how to trade, is the risk to reward. You gotta make more than you lose. You gotta make more than you lose. You can't risk, you can't risk 30 points to make 10. You're never gonna be profitable. Bullshit. Because if you're striking at a win rate of 70-80% a week, again, full disclaimer, are you going to do that week in, week out, day in, day out? No, of course not. Year in, year out? No. But if you have any type of brain in your head, which again, I'll raise my hand, and sometimes I don't have it either. A lot of us forget that we have a brain. But if you're taking the ATR, let's take right now, for example, the true range as we're testing this 50 moving average here. So if you have an 18-point range, that's basically just taking a group of I'm going to make this very simple. It's taking a group of candlesticks, right? It's averaging the high to low, and it's telling you, hey, on an average, the price action is moving around 18 points. Great. So if we get a legitimate setup that aligns with our strategy, it aligns with the way we're reading price, it aligns with our technical analysis, and we tell ourselves, hey, instead of looking for a full 18 points, that's the range, high to low. How about we cut that in half and look for 8 to 10? And if we can get 8 to 10, our win rate is going to be higher. Obviously. Now, is it going to be perfect every time? Of course not. I'm not here to say that, well, if you take the ATR and you cut it in half, you're going to win every single trade for the rest of your life. It's just not going to happen. But it kind of raises those probabilities to win a little bit more. And in turn, what I'm trying to teach and trying to advocate is when you get to a certain dollar amount, okay? And a lot of my guys in the room use the power of 20, right? And like I kind of went over this morning, not every day is going to be the same. Not every day you're going to win. But in theory, right, hypothetically speaking, let's say you make $100 today, times 20 is what? $2,000. Great. That's good money on one account. That's great money on one account. You're talking about a 2 to 3% overall return on a $50,000 account. That's good money. So if you want to make more money, in theory, hypothetically, you would what? Go get more money, which is now add a second account. Now that 2,000 becomes 4,000. And 4,000 becomes 6, and 6 becomes 8. You see where I'm getting at. We change nothing. We're not changing the amount of money that we're trying to make per day. Those big days will come naturally, right? Those big days are going to come naturally. It's not going to come because we're trading more. It's not going to come because we're trading bigger size. I'm big on trading super small size, but just having more money to trade. That's my sweet spot. That's what works for me. You know, other people, it's having, you know, mass size on a table and taking small points. That's fine too, you know. But what comes along with that game is 1-2 bad trades. That's it. But if that's the business model, that's fine. And when we talk about prop, there's a lot of different business models that you can follow or that you can go for. The way I do prop, the way I do funded accounts, it's the way I do. You can do it however you want, whatever works for you. There's other people out there who are trading 20 accounts, one mini contract, looking for $100 to $300 a day, taking, you know, 5 points, taking 3 points a trade. It's great. So it works for them. Once you get those few payouts, right, everything becomes stress-free because essentially everything is risk-free after that. And it just becomes a business expense of buying new PA account or new valuation accounts and getting those new PA and or express funded accounts going. And it becomes a business model. Like, so if any of you guys ever been in business for whatever, you sold lemonade, you sold candy as a child, I don't care. You know, you went door to door, you sold Pokemon cards. There's always a business expense. There's a cost to doing business, right? There's a cost to doing business. So that's your cost of doing business, is continuously funneling in evaluation accounts. The idea of getting 2 or 3 evaluation accounts, turning them into funded accounts, and just sitting back now and telling yourself, say, I got, you know, 4 accounts, I'm good for the rest of my life, is bullshit. You have to constantly be reinvesting into yourself, which is AKA your business, by continuously taking evaluations and having those, like we say, or like Nate's been saying, I like that one, having it in the chamber, right? You've always got to have that one in the chamber because anything can happen. The market is the market. The market's going to do what it's going to do. We can have the most beautiful setup that confirms and just rips us for 60 points the other way. That's just the nature of the beast. So we got to always make sure that we have that one in the chamber, right? And constantly have that one in the chamber. So that's how I see it on that. Again, it's a lot easier said than done, right? It's a lot easier said than done. You know, this business is hard.
We have so much leverage at our fingertips, and human nature takes over.
Oh yeah, that's the thing. You know, we have infinite leverage with these prop firms. So, you know, all we have to do is just try to manage them the best that we can. But, you know, there's an endless supply of money, right? There's an endless supply of money out there. So, you know, if you're concerned about you don't have enough cash to trade, well, the prop firms can get around that. Do you have the skills to trade, right? You know, years ago, before this prop firm and futures trading craze kind of has swept, you know, you used to have to go out there and put your hard-earned dollars in there and try to flip an account. And what that means is, you know, you put 500 in to make 1,000. You know, 1,000 turns to 2 turns, like you were trying to constantly flip your account. It's very, very hard to do because it was forcing you to go all in, either blow it or double it, And you would have these people and traders who would catch good market cycles, good market conditions, and you know, you would grow a small account into a very large one. But what you did to it when it got large is, you know, if you really never built the skills of money management or trade management, you kind of either A, lost it all, if you never really learned the technicals, you know, you're just caught a good cycle. But now you have these prop firms where if you do have the skills to pay the bills, there's an infinite amount of money out there. There's a dozen companies out there, right? I mean, I only use the two, what I would say bigger ones, but there's a bunch of them. There's, you know, you have Top Step, you have Apex, you have Bullnox, you have Take Profit Trader, you have My Funded Futures, you have all these other ones that are out there, right? There's probably even more that I'm not thinking about. Only thing I would recommend, stay away from all of the Forex prop firms. Forget that. We're not going to do that. But the futures guys are good. Guys, we're getting over this 20 SMA again. Still, this 200 still seems to be a little bit of a troublesome spot at 855. So I'd like to see what we do there at 855. Over 855, we got this declining Bollinger Band that's kind of matching up with these high up days here in the 60s and 70s. So even if we do get this pop here, we have to be mindful of where our overhead supply is. But again, we do have a nice floor that's being built here. So this floor that keeps getting tested, if broken later, might give us a great opportunity for a short. But we don't anticipate that short. We need to wait for that confirmation. And we need to see some, you know, some type of volume, some type of follow through, some type of aggression that's going to start actually breaking this day's uptrend. As of right now, it's just flagging to the top side. So but just kind of going back, you know, to how to manage. I'm keeping my eye on this 20 SMA play, guys. So just if I'm talking, I am watching this setup here. The main thing is to really, you know, discipline yourself to understand that, you know, as long as you are, you know, going to sleep and waking up each and every single day, so is the market, right? So is the market. So the market's not really going to go anywhere. The hardest thing is, you know, when you do taste that success, you have those good days, $300, $400, $500 days, $1,000 days. You want to push for that every day because of the hopes of, what if I can do this for, you know, another 30 days? That $20,000 payout is going to be amazing, right? That's what you start thinking to yourself. $30,000, it's $10,000 is going to be amazing. But the harsh reality is that a lot of traders don't have the level of experience managing that type of account and that type of portfolio and that type of size. What generally tends to happen is that one day, one trade tends to derail everything that they've been doing, right? And that's just why I always say multiple accounts is great, right? Multiple accounts is great. You know, if you take a bad hit on one account, great, you move to a next. And if you don't have another account, you go buy one. You go buy another one. These things are cheap. They're pennies on the dollar, guys. Pennies on the dollar. So, and I've never been a one to go out there and say, hey, you know, go sign up for a prop. I don't give a shit if you sign up for a prop firm or not. But what I'm saying is they're pennies on the dollar, right? And if you're trading real cash the way real people out there in the world trade, you got to invest skin in the game. You have to put up your own cash at some point. And what these prop firms are doing is it's spoiling people. It's spoiling people to where, you know, you do have 2 or 3 or 4 accounts, and then you lose on all of them, right? I'm just throwing out a hypothetical situation here. You lose on all of them, and then you're sitting there like pouting like a child, like, I can't trade anymore. Go spend another $30 and get another account if you still want to trade. If you still got that itch, go spend your money. It's not the end all be all. If you don't want to spend the money, then that's a time for you to say, I'm done trading on a day. And if you are done trading on a day, don't complain. It's not the market's fault that you took a bad loss. It's not, you know, it happens. We all lose trades. But it's how much we're losing is what stings. That's what stings. How much we lose is what stings. You know, we can handle a $100 red day. We can handle a $200 red day. We can't handle, you know, $1,000 red day. Like that stings. Guys, this 20 SMA play here that's setting up, if it confirms, we're going to run into supply 5 points ahead. Now, so on a play like this, what we would be, like what it would turn into is you're anticipating that not only are we going to get the 5 points, but we're going to scream through, right? And if we don't scream through, and let's say we spike it and come back down and you lose the trade, you cannot ask what happened. You already know what happened. You ran into supply and it got stuffed. So if you take this trade, take your profits when you got them, because that's the only thing that you can ever guarantee is locking in what's on your screen at that physical time, or you let it ride and you see if it does come up towards these 60s, right? Towards these 60s. But I feel like that's what happens a lot of times. Traders will, find these setups. They've been waiting so long to take a trade, and they take the trade and it fails. And it's like, why did it fail, right? Why did it fail? It's supposed to work. Well, going into this trade, we already know that this supply is sitting right here, about 5 points up. Let's see what we can do here. Let's see how much this wants to pop. Again, I got a very small take profit on this thing. I'm only looking for about 8 to 10 points is all I'm looking for on this thing. That's it. We can get it. It's good enough for me. If we don't, then I understand why we got rejected. Right? Now, depending on the amount of contracts that you're trading, sure, if you are someone, we're getting rejected. If you are someone who, is trading large size, then hey, maybe you're taking profits already, right? 850 into 857 is 7 points. So think about it. And I missed my take profit by literally a half or a tick or two. And I was only looking for, I think it's 8 points. But we it is what it is, right? It is what it is. So yeah, looks like a little bit of a 3 wiki top here, right? It looks like a little bit of a 3 wiki top here on a 5-minute time frame. So I would need to see, something of significance. And I'm talking about the 3 wiki top is I'm talking about this, right? If you guys are watching my screen, I'm talking about this one, I'm talking about this one, and now I'm talking about this one. Notice that? So we see how we keep getting rejected here. 200, 200. Now we broke the 200. Great. So a lot of traders think, oh my God, it's time. This is going. No, this is just a little triple top here, and then it's just going to roll back over, right? You're going to need to see something of significance, strength. We need to get over this 200 close and start pushing towards this Bollinger Band to open up this Bollinger Band. This Bollinger Band right now is coming down. It's acting as pressure. The Bollinger Band on the bottom is rising up, so it's getting tighter, meaning that, yeah, we might be getting that move, but that move is not guaranteeing that it's going to be to the high side. It's not guaranteeing that it's going to be to the downside, right? We won't know until we actually see price action do something. So that's the thing. That's the thing. Just like I stated, if this trade rolls over and it becomes a loss, respect the game, right? Respect the game. Because you had opportunity to scalp it for maybe 5 to 7 points, right? If you didn't, it's part of the game, right? The game is that we're taking a play into supply that's getting rejected, right? We need to get over this before we have any type of steam, right? And we got 3 green candles kind of going to the upside. I can see this pulling all the way back to 45. I could see it even pulling back to 35 if it doesn't want to get steam and go, right? So you can always make a decision here if you want to cut your trade at break even, right? Cut your trade at break even. You know, this trade that I'm in here currently up 20 what, 25 bucks, $27. Again, 2 micro contracts. I'm not looking for shit here, just looking for a little bit of a move. But the way I see it, and it's just going to break even, but the way I see it is, if I can't get 8 to 10 points off a move, what's that telling me, right? What's that telling me? Price actions, it's not really, I mean, it's such a small range for the NAS, right? It's such a small range for the NAS that there's not a lot of follow through. And that has to start telling you one thing. It has to start telling you that if you're not getting the follow through, you need to, and you're still going to trade, you need to think about cutting that area where you're trying to get profits sooner. Like, it needs to be cut in half. And I did that by, I mean, the range of the 20 SMA was 11 points. The range of this candle that was breaking the 200 was 14 points. Our average true range is 17 points. I'm only looking for 8, right? If I can't get 8 points off this move, can I really be upset? Is that my fault? Like, is it, like, again, and a lot of traders, I feel like they get into this like, oh, like, what did I do wrong? You didn't do nothing wrong. The market's not even giving you 8 points. Like, what do you, like, you know, how can you really complain, right? How can you really complain? I mean, if you can't get 8 points off the market, golly, it just means that there's just no juice. There's no juice there, right? But let's see what it continues to do here. To the downside, I mean, I'm looking at the support here of 44. I'm also looking at the support here of 34. So all in all, if it doesn't work out in my favor here for 8 stupid points, I mean, I'm willing to risk the 20, 25 points. Like, you know, I'm willing to risk that to see it play out, right? I want to see this play out. I don't want to get out at break even and then watch it go up, and it would have hit my wimpy 8-point take profit, right? So did it hit? Oh, no, it didn't hit yet. The 20, I'm, how many points? Oh, there it goes. Finally, it got hit. So there was the 8-point take profit, guys. Again, another $35, right? Another $35, 8 points. That's it. You know, that's it. You know, this thing can scream up another 20 points. That's fine. That's fine. I'm not really looking for much. So that brings the total Top Step Express funded account up to $361.44 on the day. So this account went live yesterday, and like as stated in my room, you know, if you guys are watching me on YouTube, as stated in my room, what I'm trying to do with this account is build a cushion. So a lot of times, I want to talk a little bit about management here. So before I do that, guys, you got a Bollinger Band sitting here at 66. If you're still currently in this long position, start getting cautious. Okay, start getting cautious. If you need a break even, break even. If you have some small gains, maybe consider it. If you're going to let this stop you out, right, I would look for 44 or 35 as a stop. 44 or 35 as a stop. That's your 20 SMA. That's your rising 5. That's also, what the hell is this here? Your 150-day simple moving average. Again, you're getting a good push here, so don't be greedy. Just give you what the market is giving you. ATR is sitting at 17 points. That range of the candle over the 200 is 14 points. You know, think about it, right? Since the 20 SMA play, 50 all the way up to 60 is 10 points. Is 10 points. So, you know, the range was 11 points. So technically, based on my rules, based on the way I trade, this hit at a 1-to-1, right? This hit at a 1-to-1. If you were going to risk 11 points on this trade, given the reason why candle bottom low as your stop, getting in on the confirmation, this hit at your 1-to-1. Okay? If you're not happy with that and you wanted more, I can't help you there. Can't help you there. There's your 11 points. So if you didn't get it the first time, there what it was again. Gave you a second opportunity to get your 1-to-1 on this 20 SMA play. Okay. You guys see how that works? Again, these don't happen all the time. And again, I was very, very cautious even going into this play, just due to the fact that this stupid 200 moving average was sitting right here, right? What was the first thing that I said going into this play? That the 200 was only 5 points away from our entry, right? If it was perfect, you know, we get in and it confirms, we only had 5 points anyways. So my take profit was 8 points. Took a little bit for that to actually get hit. Again, your full 1-to-1 was 11 points. That did get hit, okay? So, but anyways, going back to how I'm going to manage this Top Step account. This Top Step account went live yesterday. I'm going to try to nurse it as much as I can. So the total balance in 2 days is up $752. Okay. Again, that's averaging around $300 a day plus. I'm not by any means trying to get to $300 a day. I'm not by any means trying to make over $200 a day. Okay. Because I know a lot of you guys that do use Top Step, you guys right away, the first thing you do when you get funded is, how many days do I have to make 200 before I can take a payout? Forget about that. That means nothing. It means nothing. You have infinite amount of time to trade this account. Why are we going to sit here and stress ourselves out of trying to make $200 a day to get that payout? Because if anything, you're going to make $200 a day for 5 days, take your payout, which is half. You're going to get 500. You're going to have a $500 drawdown. You're going to blow it up in a day. That's generally what happens. So instead, guys, it's pushing up a little higher here. Make sure to take those profits. Instead, take as much time as you need. Just let the days come however they come. And what that means is ES is setting up to break out. Great. Yeah, so is the NASDAQ. So it looks like they're both following suit. So if you guys are in the play on the breakout, you know, try to get your money and try to get your money. I go to the hourly chart here. This hourly chart is approaching. Okay, I want you guys to focus on this hourly chart for a little bit. This hourly chart is approaching the 20 SMA. It's also got a 50 EMA right here. In order for us to fully break out, right? In order for us to fully break out and pop that balloon, we need to take out the previous hour highs. We need to get over 18,875. That's going to open this up to 95. So we might have another 20 points where this just really screams. It really starts to open up here. All in all, today's price action was 2 candle push higher, 2 candle consolidation. Do we get that next leg up? So we got our first leg up, right? We came off the decline. We found the bottom, pushed higher. We're consolidating sideways. If we want to see this second leg for today happen, we've got to get over 875, 18,875. Also, another reason why, if you are in a smaller time frame, long position here, I would be very, very cautious. I would be very, very cautious, because if this does not, right, you always have to look at the what ifs. What if this gets rejected here? What if sellers step in? Do I want to give away these profits on this current trade? It's a nice move so far, right? And this very well over 75 could let the steam out. It could let the steam out of this balloon, and this could go up another 20 points into the 90s. That would be potential, right? That's the potential we're looking for. 95 and then 908. 895 and then 18,908. That's what we would be looking for as measured potential, right? But we got to do one thing first. We've got to clear out the 1 hour supply, because if we don't, sellers can still step in. So I hope you guys who took the long position, hope you guys made a little money on that trade. It's a nice little one. Kind of did what we wanted to see it do in the best case scenario. The best case scenario was to take the 20 SMA play, pop the 200, and come into the Bollinger Band. That was best case scenario. for that potential trade. So in that particular situation, that worked out very, very well. And we're back up here to, right, this high of day. Notice all these wicks up here at the high of day. So if I was just kind of drag a zone, right, drag a zone to where we were testing multiple times, you can see that we're in this zone. We're in this zone. So I like to play devil's advocate a lot because I like to know both sides of the trade. What if this is a lower high? What if this is a lower high? Then we would come back down, right? That's obviously the worst case scenario. What if this is not a lower high and we're going to break through? Then what's our potential? Maybe 900. That 95 and 900 would be our potential if we can break through. You'd want to see a breakthrough, pull back into the zone, consolidate, and then push through. And then you would want to get that push into 900. But yeah, as far as you know, that Top Step account, and the reason why I want to emphasize it so much is because I want you guys to start analyzing your accounts in the same way, whether you're in evaluation or you're in funded. Guys, since I've come on here, you know, 2 trades, 8 points each, that's 16 points, 2 micro contracts, around $60 to $70. That's not bad, right? That's 2 trades. That's the last bounce off of this EMA 50 and this 20 play. Great. Both long. Why am I going long? Because the trend is higher. I don't want to go short in an uptrend. Well, this is not an uptrend. The market's been going sideways. Bullshit. We bottomed out in the morning time from the open. It's pushed higher. This is not a downtrend. Market's not going sideways. It's drifting higher. Okay, it's drifting higher. I always hate seeing that, you know, especially on YouTube, right? On YouTube, there's a lot of fucking people that start speaking and spewing their nonsense. That's fine. Everyone looks at the same charts. We all analyze the charts the same way. Now, am I saying that this is just, the chart has just been screaming to the upside all day and it's just nonstop green candle after green candle? No, I'm not saying that. Yeah, was the market choppy for an hour and a half, 2 hours? Sure. But the overall fucking trend, right? Excuse the language. The overall trend was higher. We bottomed out literally the first 5-minute candle of the day. Okay? Pushed up higher and it went sideways. That's it. It's not choppy. It's not choppy. There was a beautiful move here. There was up to upside. Beautiful move here to the upside. What was that stupid bounce play I did? A little bounce play here on the third touch of that 50 EMA into the 200. And then their 20 SMA. All longs. Again, because I know there's some people out there, well, I made money shorting today. I'm not saying that you can't make money shorting, but it's a little risky. It's just a little risky. It's like, you know, since I've been trading, it's been almost, you know, I don't know, the summertime is going to be 10 and a half years. I've been doing it full time for 8. I think I've had 17 fucking heart attacks. 17 heart attacks watching price action when I'm in a position, right? I'm getting too old and my heart can't take that anymore. So what I want to do is try to stay on the best side of the trade from what I see on the charts. Now, again, like I said, we're all looking at the same chart. So if you're seeing something drastically different than me, as far as, you know, active shorts on this chart from here, from this green candle to where we're at now, that there's been a downtrending day here, or I should be looking for shorts, please tell me. Maybe I need to change prescription on the glasses or something. But to me, it just looks like I should have been all day just kind of waiting for the bounces off of demand. Yeah, I had 6 heart attacks the other day. I think it's at 17 now. I lost count. I don't know. I lost count. Yep. slight pullbacks. Beautiful. Because you have all this supply, right? Again, I know someone, I don't know if you're in here from the room, but someone on YouTube had commented and say, you know, how do I know what all these lines are on the chart? And you know, how can I decipher what's going on in here? There's a couple of things. They're all color coded, right? They're all color coded. Obviously, I've been trading this chart for years and years and years. So I know that my purple is a 200. I know that my reds are the 50 EMAs. I know that my yellows are the 200s. And I know that my green is a 5, and I know my blue is the 10. Like, I know that by heart, just by memory, because I've traded it for so long. And 2, this is not the only chart that I'm looking at on my screens. What you guys can see here is this chart, because I feel that if I want to read price and I want to trade, well, I want to show you guys, you know, all potential levels, right? But I have 3 monitors. I've got a chart with just a 20 and a 200 that's on the side of me. I've got another chart with the hourly chart only that I'm looking at, right? So again, it's not like I'm sitting here trying to decipher through all this nonsense on my screen, trying to find little pockets. I'm looking at it more so for when I get an active setup that I like, then I come to this chart and I say, okay, I might run into supply here. I might have demand here. Okay, if I'm in a trade, maybe I should think about taking profits here. Do you get what I'm saying? It's not like I'm using this chart to decipher, oh, I need to get in above the 5, and then if it crosses the 100 and all this crazy nonsense. No. I'm trading one way only. You know, it's 20 SMA plays. It's reversals, right? Like off of firm support. And those firm supports I'm looking at, linear regression, 50 SMA, 200 SMA. Those are firm supports for me. And I'm looking for the change in trends over under the 20 SMA. And then I use the 5 SMA as kind of like a gauge, right? So for example, since this 20 SMA play has populated, we have traded over the 5 and 10-day moving average. So someone looking at the 9 EMA, this is power trending for you. This is power trending over the 9, right? The 9 is going to match very, very closely up to, you know, in between my 5 and 10. Great. This is power trending over the 5 SMA. Great. So if you're in a long position, there's no reason to get out of this position until we start closing below the 5. But then that opens up a whole can of worms, because one could say, well, just because we closed under the 5, I'm looking at the 200 as support. Why would I get out? It's just to back this of support. You see what I'm saying? So there's so many different ways to analyze this chart. What makes things clear is trade contract size that's okay to withstand a little bit of heat. So many times, you know, especially scalpers and day traders, so many times you want to click buy and you want to see this thing up $300, right? It's just, you're not even giving it enough space, you know. It's a lot of times we're not even giving the trade enough room to work. If I would start trading now, where would I enter? Would I wait for a pullback and get in on the 20 SMA in the uptrend? Well, at this point in time, what I would wait for personally is the hourly chart. Okay, I would wait for this hourly chart. So we're going to have a new hour candle come out in around 11 minutes. What I would want to see is a confirmation over 18,875. I need to get over this 50 SMA on the 1 hour chart, because if I can't, it's nothing more than just another rejection, right? So I need to take out 75. Now there's 2 ways to do that. If we take out 75, I would look to, depending on the number of contracts I'm trading, there's 2 ways to do it, and I can't say that I do one more than the other. If we take out 75, I'm going in on that trade, I'm getting a few points, and I'm getting out. The next way to do it is letting it break 75, put in a high, and pull back, right, on a 5-minute candlestick, or 2-minute or 1-minute, whatever chart you're trading. Break 75, put in a new high. Let's say that new high is 82. Once it puts in that new high, let it pull back, let it go sideways, wait for a following candle to take out the new high of 82. That is over my pivot of 75, and then go long, with anticipation of measured potential being sitting in the 90s. That's how I would analyze that, okay? And that's how I would take the trade. But I wouldn't do anything until the new hour candle starts, because this is the reason why. I don't want to put my money into a candle that's closing in 10 minutes, because what if the next 10, 15, 20 minutes is a pullback, and a pullback? Now I'm stuck at the top wick of this current candle and I'm in a pullback, right? With no guarantee that it's going to come back to get me. So what I would rather see is this 1 hour candle close and then pull back, go sideways, or do something else. And I want to be in a fresh hour candle. The way I think about it is, you know, I want more troops, right? I want more soldiers with me. I don't want to be the last dude here coming through the door, right? I want to be in with a bunch of people. And if I analyze it purely from a 5-minute time frame, then yeah, I'd like to see us pull back into the 50s, to be honest. 50s or even 40s. I'd like to see us pull back there and then boom, take out this most recent swing high of 72.75. That's what I'd like to see. So I'd like to see this, right? Watch on my screen. I'd like to see it pull back here if it's going to go higher, and then come through. And when we come through, I want to be in on the come through. But again, you know, is it going to do that? Is it going to do that? I don't know, right? I don't know. I can only analyze. And that's all trading is we are just analyzing technicals. We're just analyzing price. You know, it's another thing too. You know, a lot of stuff, you know, being in this business for a long time really irritates me, because, you know, sometimes people say, you got to learn how to read price. You got to learn this method. You got to learn, you know, fucking order blocks. You got to learn how to read the DOM. Like, man, it's all the same shit, guys. It's all the same shit. All of that is all the same stuff, right? Something needs to do something in order for you to do something, right? Stupid business. Up $465 with M&Q using a strategy. Great, congratulations, man. That's another thing too, guys. You guys can make decent money, good money, trading micros. I'll just put this into perspective. So these last two trades, I traded 2 micros, and I took 8 points, take profit, $35, take profit. So that's $70. If I would have taken the first trade, that would have been another $70, $60, right? So even that would have been, to taking 3 trades today would have still been over, you know, $100 profit, right? Bob, don't worry about the fees, bud. Don't worry about the fees. On Top Step X, they don't have any fees. I'm not worried about fees. A couple dollars. A couple bucks. You know when I worry about fees? When I make 50 trades in a day. That's when you should worry about fees. Other than that, you're good. You know, if you're one of these guys who's taken, you know, 5 micros, 10 micros, and you're trading 100 times a day, yeah, fees are gonna kill you. But I mean, I don't know. I posted it up in the room for the guys. We were talking about the same thing on the fees. On the fees, you know, Top Step X does like commission free. I don't know, round trip. It's like $1 something. I'd have to pull it up. But like those are things that I don't worry about. Yeah. I'll post it up, Bob, on my community post, just so everyone is clear on like what the fees are, because again, every broker, every platform is different. Some better than worse. Like we have people that trade live, you know, brokers, like where they're not using prop firms, and you know, like for example, okay, I'll use my example. I trade options on Charles Schwab with Thinkorswim. There's no way in hell I'm going to trade futures on Charles Schwab. I have a dedicated futures broker, and I use 2 of them, which is TraderVate and I use Iron Beam. Those are 2 where I have my personal money, because it's a dedicated futures broker, right? They're going to give me better margins. They're going to give me better, you know, turnarounds. But I don't focus on that kind of stuff, because if I'm doing things right, again, this is like, again, the same way I used to have this discussion. Again, I'm not harping on you. I just want to make a point to everyone out there. I used to have this discussion a lot with people, you know, when they were really focused on trying to learn options with me. There it is. There it is. Thanks, Norman. When people were trying to learn options with me, they were telling me, yeah, that's good. 124 on the round trip. That's good, Bob. I mean, that's cheap. I mean, it's cheap because even if you're trading such small size, you're looking to take at least 25 bucks, right? So what's a couple dollars, right? What's a couple bucks, right? Let's toss the guy who's down on his luck, a couple quarters, couple bucks at it, you know, like it's no stress off our back, because if we're doing a great job, we're gonna make more than our commission, so that's not gonna even be a problem. But I used to tell people too, they used to say, you know, well, what strike prices do you play, and what's your expiration? You know, the you know, the Greeks are going to eat you up and all this bullshit, blah blah blah. You know, it's like, I'm not worried about that, because if I start worrying about those type of things, okay, yeah, Bob. So yeah, $7, right? We're not going to do that, right? We're not going to do $7 for a turnaround, right? When we get this thing for $1.50, you know, it makes no sense. You know, so at the end of the day, like, I'm not saying let's go out there and just get waxed, right? Like, I'm not saying let's just go over there and let's just, you know, bend over and have them have their way with us. No, let's just get the best price we can get, and then that's fine. You know, whether it's $1, $2, $2.50, that's fine. We're not going to go out there and spend $7. That's all I'm saying. The same thing with options. People were saying, aren't you worried about the decay? Why would I be worried about the decay if my trade should win? You know, if it doesn't win, I'm out of the trade. The decay's not even going to affect me. I'm not holding this thing overnight. I'm not holding this thing for a week, right? I'm not buying on Monday and holding it till Friday. No, if the trade didn't work on a Monday, then I should be out of the trade on a Monday, right? So the decay never really bothers me in options. And a lot of people, they don't really understand that. Like, they don't understand that because they're always thinking about other things. Now, again, you know, like if one was to say this, and this makes no sense at all, but I'm just trying to make a point here. If one was to say, hey, if you bought these options contracts in this premium, if you don't sell out within 10 minutes, that decay is going to kill you, you know, 20%, then fuck, I'm not going to trade. What the hell? I'm not going to trade with them. Doesn't make any sense. If I can get a better deal, I'll trade at 10% instead of 20%. Again, that's completely irrelevant. It makes no sense at all, but I'm just trying to make an example. But yeah, I'm not really worried about that. The same way with the Top Step account, I'm not worried about the $200, because I know someone asked me a month or two ago, I don't know, before they even passed Top Step, before they even passed the combine, when you pass, how many days do I need to make 200 before I can take a payout? And it's like this. Why are we worried about that if we haven't even passed? Makes no sense. Let's pass. Let's make some money. And then we'll figure it out at the end of the month. For me, that's always been my mindset. I'll figure it out when I need to. I don't need to, you know, my brain is already bogged down with trying to trade well, or as best as I can. Again, remember, I'm just as stupid as anyone else. But like, if I'm trying to do one thing, I can only do one thing at a time. All I know from all these years of sitting here at this stupid desk is if I do things right long enough, shit starts to go my way. That's it. Things start to go my way if I do this long enough the right way. I'm not focused on the money. I'm not focused on how much can be. I'm not focused on what do I need to do. No. Let me just focus on the process, and we'll figure it out in 30 days. If you're a person that gets to 30 days and you're like, well, shit, man, I made $2,000, but my best day was only $80. Great. So now you got a $2,000 cushion in that account, and we're only worried about catching 5 good days where you're trading the same, where you happen to make over $200. It's never a goal, right? I'm speaking with Top Step. It's never a goal I have to make $200. I don't have to do shit, right? I don't have to do anything. Just like you don't have to do anything. We don't have to do anything, guys. We're doing this because we want to. We don't have to make $200. Well, they said you do. I don't care what they say. I'm going to do what I want to do. I hope that makes sense. So notice how we're getting rejected up here, guys. That stupid little zone that I drew up here. Again, you know, it's not rocket science. I didn't know it was going to stop here. You know, I don't know that, but like all I'm taking is what did we do in the past? Where are we at now? Uh-oh, this could be potential at where it's a little bit of a rejection spot here. That's it. So if we do break through, right? If we do break through that 75, or what the hell is it? 79. If we do break through that 79, let's see it put in a high, pull back. Oh. New hour candle. New hour candle. Do you see why I say that I wouldn't have gotten long, right, when the hour candle was closing? Imagine if you were a guy or gal who loved this chart and you're like, we're breaking through. That's it, baby. I'm going to make so much money. I'm in so early on this trade. We haven't even broken out yet. And then this opening new hour candle opens and the first 5-minute candle sinks 28 points. I mean, could you imagine the heart rate? Could you imagine the fucking heart rate? If you're in on this play long. I mean, again, I don't know if anyone's in long on this play, but if you are, please tell me the heart rate right now. This is the kind of shit that gives me a heart attack. This is the kind of stuff where I've learned over the years, it's better to just be a little bit patient and wait for more confirmation and trade small size. I mean, God forbid I was in this thing too many contracts, expecting it to break because here we go, right? Oh no, this has got to go. And then you get stuck in a 28-point drawdown on like multiple mini contracts in the blink of an eye. You know? And also, here's food for thought. So those of you guys who are in evolution traders and you guys, the newer people who haven't got familiar with the terminology, that little joke that we have about the big's bottom and big's top, this was a big stop. This was a big stop here. The previous 5-minute candle, your eyes should have been lighting up. Why? Extended move to the upside into a level of supply. What's the level of supply? That high of day there, right? Reversal candlestick. What did someone tell me? Doji candle? I don't know, right? Inverse hammer candle, whatever you want to call it. That candle, eyes light up. Entry, when price breaks the previous candle low and loses that 5 SMA. Because if the 5 SMA is our power trend, if broken off a reversal candle into a level of resistance, there's your big stop. Doji or indecision. Yeah. You know, doji candle, indecision candle. So when you get those candles, so for those of you guys that have asked me, you know, how can you scalp these other moves and like, what are you looking for? I'm looking for crap like that. That's what I'm looking for. Extended move, right? And when I mean extended, look at the green candles. 1, 2, 3, 4, 5. 1 red candle. 6, 7, 8. 8 green candles almost in a row. We had 1 red candle. Indecision candle. Following candle breaks the 5 SMA, which is your power trend. Flushes into demand. What were the demand zones? Take your pick. 10, 200, 20. Right? That's all it is. Are those trades 100%? No. Could this have pulled back really quickly and then broken through? Absolutely. What's your stop loss and why does Biggs, the guy in the room who coined this term, why does he like it? Because guess what? Where's my stop loss? It's right there. That's my stop. If we break that indecision candle high, I'm out. Very small loss. Oh well. Take my medicine and I move on. But if I'm right, guess what? I caught a top. Now you can't be doing that looking out all the time right? Like look at this one here, indecision candle here, right? I'm trying to highlight it. Indecision candle here at a level of resistance, sure, but this is not an extended move up. This is 1-2 candles. This is not enough, right? It's not enough. It's not enough. Now we could almost say that this here earlier in the day off the 200 the first time, or this one was, and you would take this swing low as your entry, which would have been this extended red bar, and your stop loss would have been here at the highs. You see that? Why is this valid and not, where's that stupid one? This one? Why is that? Because look at the move we came off of. 1, 2, 3, 4, 5, 6, 7, 8, 9 candles, you know, to 4 reds. I mean, this was an extended move to the upside. At a level of supply, look for the indecision, boom, shorted back down. Extended move to the upside, indecision candle, shorted back down. It works until it doesn't. It works until it goes and then snaps you, but that's trading. Getting a little bit of weakness here, but I still have support all the way down to 35 and then below 35.23. Right back down. We kind of wick down towards that 50 SMA, guys. Caught the pullback. Beautiful. Good job, Norman. Great job. So again, you know, 1, 2, 3, third hour here where we're kind of just trending sideways. We still need to get over, like, if you guys can notice that, right? Just really start to like notice what goes on in the charts, you know, will really help you on the smaller time frames when you start noticing what's going on the bigger time frames. If we can't, like, it's the theory is this, right? Like, and I've said this hundreds of times already. The way it was taught to me, stocks don't go higher until they take out a previous day higher low, right? Stocks don't go higher unless they take out a previous hour candle channel, right? And have room to move into the next channel. So yeah, did we push up last hour? Sure, we pushed up, but we pushed up into the top channel. If we can't take out the previous channel and close above it when the new hour candle starts, and what do you think's going to happen, right? It's going to come back down. So when it comes back down, it's going to come back down to where? The middle of the range, if not the bottom channel, which is sitting at this 10 SMA on an hourly time frame. What the hell is this one? 150. So we have these two major demand zones here on an hourly chart. I would have realistically liked to see us confirm previous hour highs and push into, you know, 895, 910. That would have been great because that was setting up beautifully. Now that can still happen, right? That can still happen. We can hammer off this support and take out previous hour highs. And that's what I would be waiting for. I'd be licking my chops waiting for that trade if I was looking to still trade, right? Like this would be a setup I would be looking to trade. Like I like to tell people all the time, you know, like if this was an option, if this was a stock chart, you know, like let's say this is, you know, one of the stocks I trade, Nvidia, Tesla, and I'm looking at this chart, the only thing I'm waiting for here is 18,878 to get confirmed. And when that gets confirmed, I want to be long. That's it. I'm not telling myself, well, it's pulling back, where's my short? There's no fucking short here for me if I'm trading options. Remember, when you're trading options, you need room. Like I need space. Well, it's pulling back, you would have made money. Yeah, but I'm basically guessing that the market's going to continue to pull back, right? My setup is here long. So I have to sit and wait for that. I won't even have a short setup until I see an hour candle take out the previous lows. Then I might have a setup down into lower demand zones. So I'd just be sitting on this chart. Again, I don't really know if I want to take any more trades on this top step account. I'm always open to taking one more on small size, but it's got to be a setup that I like. $20 SMA short here. if it comes through and loses its 50 SMA, it has room down to 18,825. So you have to say, is this enough room for you to make cash, right? Below the 35 to 2025 is 10 points. Can you be quick enough to snag that? Is it in your wheelhouse? Is it in something that you would be considering taking, right? If this continues to bounce. So what you would be looking for is get rejected here in this demand zone, or in this supply between the 5 and 10, and then you'd be looking for the breakdown here, and that's where you would want to take your profits into. And if you're looking to, you know, hold a runner and see if you can gain more, then your next, you know, your next measured potential would be down here into this linear regression at around 809. Just know though that 10 points is not a lot. It could wick down there. By the time you're getting in, it could be bouncing. So you need to really have a clear plan in order. A clear plan to get out if you're wrong, or a clear plan to take profits on a quick wick, right? 3,000, Bob. $2,000 drawdown. You got to make 3,000, and then you get into a funded account. Yeah, but I don't trade the evenings. It's just way too slow and sometimes choppy. I do like, you know, trading the pre-market an hour before the New York Open. I like that time. 3,000 in 1 month is about 20 trading days. Yeah, depending on what your take profits are. Yeah, you can have some big days, but again, if you trade it conservatively, that's around 20 days. So you should pass it trading conservatively in about 30 days, I would say. Um, you know, I'm definitely not taking a full 30 days. Either I'm looking to pass this thing in a week or two, or it's gone. Like that is what it is. I'm trading a lot more heavier size because I don't have a lot. I don't want to waste a lot of time. You know, when there's no real incentive, right? There's no real, like, the game for me is not, you know, taking the evaluations. It's, you know, getting into the funded stages with these accounts and then growing them slowly. Then from there, I do the slow approach to it. Um, Guys, this little play here, I'm trying to take a stab at it short here. I'm not probably going to give it all that much room here. You know, wick my into this position again, 2 micros. I'm looking for 8 points. I've got room down to 23. You know, if it comes, it comes. If it doesn't, we're just going to get the hell out of the trade real quickly. I'll be keeping a close eye on this 5 SMA here to see if this gets broken. And then I've got resistance here at 49. That's going to be my ultimate kind of, you know, cut this son of a bitch before I ended up getting trapped on a reversal back to the upside. So we're going to kind of give it here at least this 5-minute candle and see what this 5-minute candle wants to do. But if it starts gaining a little bit too much steam, then we'll just cut it. Support right here at this 50 SMA, you know, it could snap back over. That's why it's having a little bit difficult just flushing down to the next demand zone in this 23, 25 area. You are going to have some buyers here. Now, again, if I go to the left of the chart, we've bounced hard once. We came close and bounced pretty aggressively twice. And the first time, 3 times. So there was 3 like clear areas where we just bounced, right? So again, that's why I'm going to treat this with a little bit more respect, right? Just treat it with a little bit more respect because I know prior it's bounced from this area hard. So I am reaching, I'm extending for this play for not that much of a return. But again, we are playing with profits. And if I lose, then more than likely I probably just close this account for the day. And that'll be it. I don't like how all this is bunching up right here. I would need to see on this hour, on this, excuse me, this 5-minute candle, I need to see this flush. I need to see this one flush because if not, it's going to scream back up towards 50. It's going to scream back up towards 50, which ultimately is probably going to stop me out, right? I'm going to exit if it starts screaming up towards 50. And then I could still see this reject and then be trading down here towards 800 later. But that's okay. That's okay, you know, like that's fine. Because I always give like a little bit of a time limit. Like I need to see it go, you know, pretty soon, you know, within the first 1 to 2, 3 candles. If it doesn't, then hey, you know, we don't really want to waste too much time. If it goes later, then I always tell myself that was someone else's trade. I'll leave that for someone else, right? Everyone else out there has to make cash. That was their trade. Hey, good job, Norman. 587 is a hell of a day, right? That's a hell of a day. That's something to be proud of. Good work there, trading. Good work there. So we're getting back over this 5 SMA here. It's pushing right back into this area of the 20. Yeah, so it could be again, because what has history told us? Bounced once, bounced twice, bounced 3 times, right? So could be getting ready here to start to confirm this 20 SMA and start pushing back up towards the high side, which is confirming that previous hour candle's high, which is bullish, right? This is very bullish. And again, this is the first short trade that I've taken today. And what did I say a little bit earlier, right? Kind of stick with the trend, with the trend, with the trend. Now I'm going kind of against the trend, and we can see how it's, you know, again, if someone's trading bigger size, it really starts to get that adrenaline going. That's why I always stress position size is everything. So you always want to take trades that you can handle mentally and emotionally, because they will not all work. They will not all work. Got about a minute and a half here before this 5-minute candle closes. Bull's doing a pretty good job right now holding. Good stand there for the Bulls, guys. Good stand there for the Bulls. Now what we want to see here, this active 20 SMA play get confirmed. You do have room to kind of push back into this prior little double top here, right? This prior little double top. I cut that trade personally. Again, small paper cut loss there. We're still positive on the day. And that's the game, right? That's the game. So in any scenario, you always have to, on your trades, guys, 20 SMA play setting up here, you always have to analyze your trades against your losses, your losses against your winning trades, because of the fact that, you know, if, for example, someone had too much conviction, like, oh no, this is it, this is where the market turns and this is where we give it all up, and you take a big stab at it, right, where you go in crazy size, that candle, right, from low to high was an 18-point candle. That's a big candle, right? That's a big candle. But when you're on the micro side of things, you're talking about $30 a contract, right? I mean, we're talking about, depending on where you live, we're talking about a cup of coffee here, right? This is, you know, a cup of coffee here and there, you know, is manageable, especially when you're managing that against your day's P&L, right? Got a lot of support sitting here between 35 and 42. 35 and 42, good little spot here. If the bulls hold this area, see us really pop through on the upside here, you could get one of those nice big follow through candles, right? If it does trade back to the bottom of the range here, back down to this floor again, I'm not going to personally take it back down short again. I would need to see something more significant as far as levels be broken, which is probably going to be coming through the hourly chart, right? Hourly chart, at least get through 830, and if not, get through 821. And from there, you have room to around 800. I could have gotten out of that position a little too early, but again, you know, that's the game you play. So when what I will do here, there, and that price target would have been hit. So what I do look at here is, and there's that flush that I was waiting for. But if in that particular situation, I cut that trade a little too early, again, only to protect what the P&L was on the day. Now I have to kind of look at it like, what essentially would have been the smarter move, right? Like, what could I do differently for next time in that same type of situation? I would have had to give it a little bit more wiggle room. Okay. So that wiggle room would have had to been the 200 and the 10-day moving average, that top supply, versus breaking over that 50. Okay. So when I sold breaking over the 50, it came in, you know, put in a very nice candle, right? Put in a very nice candle, but it ultimately did get rejected. So how much more would I have given up, right? How much more would I have given up? I don't know, maybe another 8 to 10 points. It wouldn't have been too bad, to be honest, to probably wait for the closure over this top supply here, and then held that, and then obviously that TP would have been hit. But, you know, it is what it is. Good little wash here. Coming right back down to previous hours lows, guys. This does have potential to kind of squeeze into this 800, right? If there's selling pressure, it has potential to squeeze into the 800 here, with mini support sitting at around 808. 808. All right. Guys, I'm going to pull up the 2-minute chart here. This 2-minute chart put in one of those indecision candles. It's got room to kind of push back into 36, between 36 and 38. Actually, it was a good 2-minute 20 SMA play. Very good 2-minute 20 SMA play. All right, guys, I'm going to take a little bit of a break here, kind of let the market digest. We've got a new hour candle forming in 20 minutes. So I'm going to kind of sit back and wait to see what we do here in the next 20 minutes or so. Make sure you guys protect your balance. Make sure you protect that P&L. Again, always manage your future trades based on what you've done today. So that's regardless if you're up 500 or down 500 today, you know, manage your current position in that current, against that current P&L. Stay safe. I'm probably going to lock this account out unless I see something drastic. But I'm okay with the gains today. So we'll probably just continue to slowly build this account, right? Slowly build this account. That's my goal for the next at least week to 2, is to slowly build this account and just kind of let the days stack up and then kind of analyze where we're at in a few weeks from there. Again, I'll probably, you know, continue to do these lives on YouTube, maybe a couple times a week. It's kind of good for people to see and hear, and kind of also helps pass the time a little bit as well on my side, which is cool. And I will just continue to kind of give those end of day recaps on, you know, what I did, or you know, what I could have done better, or what I could have done, you know, what I did good, you know. So it's always good to kind of go back and back test that kind of stuff. But I'll see all of you guys on the next stream. Make sure to stay safe. Again, like, comment, subscribe, do all that good stuff, and I'll catch you guys all later.